Hi everyone, and for welcome again for another backtesting video, which is related to another indicator strategy. And you are on Algo Driven Lab channel. I welcome you all here again, and I will be glad to see new viewers of my channel. And also, I'd like to before I start, ask you to subscribe to this channel because I'm doing more kind of research, analytics kind of work, and it will be like very interesting and stimulating to me to post next sets of videos about backtesting. But today we're gonna to continue our trend following backtesting series. Yeah, and today I'm also gonna to share one of the interesting indicator strategy, which is also well known among the traders and to some extent investors. So this is a Bollinger Bands strategy, and I'll explain the logic a bit later on during my explanation of my code blocks. And then, as usual, we're going to proceed with some analysis, and we'll reveal where this strategy works or not. And unlike the previous videos where you can find on my channel, actually this time I decided to shorten analysis and provide more depth, right? In terms of metrics, in terms of visual representation, because I think covering all the five is just like a quick overview, and I guess we should go just two or maximum like three. But by the way, if you don't mind, just drop an idea, comment whether you like this kind of format, right? Two assets or three assets, or maybe even one asset, no comparison. Please let me know. Okay, so let's start. As usual, first I'll explain the logic, and this time I just bit kind of reconsidered the logic and the order of the blocks, code blocks, and then we're going to proceed to the analysis. And let's agree that today I'm going to backtest only Apple stock, for example, as like representation of the stock market, to some extent, and for example, SPY or like S&P 500 index. So we'll compare whether using the strategy worthwhile for stock or it is better to use it for whole index, right? Though I'm not comparing Apple versus Nasdaq because it will be like not real kind of correct, I guess, comparison because Apple inside the Nasdaq index, right? And comparing like Apple relative to the other tech stocks will be like, I guess, not convenient. And let's compare to the more kind of broad and wide index, which is S&P 500. Okay, so let's go dive in. And what we'll do now, first we install and import all the necessary libraries. Again, it is Yahoo Finance platform where we're taking the closing prices of Apple and the S&P 500 index technical analysis for Bollinger Bands strategy, pandas, numpy, matplotlib, usual Python libraries. Here we install them, import them, sorry. Next, we're going to consider immediately the helper function, meaning that we are define our like key 5 indicators. For example, we are using Drawdown. So it's just to remind it's the largest peak to trough portfolio loss during the period. So at one point of time, we are losing such amount of money if we use our equity. Like let's say, for example, if we are using 1 million at one point of time, we can lose like let's say 20% or 30% at one point of time, not the whole history. Okay. Again, next one is Sharpe Ratio. It measures risk-adjusted return by comparing excess return to total volatility. So it shows whether the risk-reward strategy is worth considering at all or not. Usually should go up to or close to 1 or should be better than more than 1. Compounded annual growth rate show average yearly return over time. So this is also a very important metric because they show our percentage of gaining right over time relative to other, like let's say alternatives such as deposits, like and other like instruments, financial instruments. Fourth one is win rate. It is percentage of trades that are profitable. This should go up. Almost, it should be more than 0.5 or 50 because we would like to see more win rates if we also consider long and short. Besides long, it's going to buy. Short, we're going to sell. Profit factor is ratio of total profits to total losses, indicating strategy efficiency. So basically, our numerator is total profits should be higher than total losses to see our profit factor to be like higher. The higher, the better. Okay, this is logic of our metrics we are going to assess. Okay, data download. Here we download our data. So I already prepared the ticker for Apple and we're using the ticker SPY later on at the second part. So basically, actually, I just need to update this part and let's backtest by 22nd of May and the 22nd of May 2026 for 10 years if you like don't mind. We can also extend this by 15 years, by 20 years, but let's keep it like 10 years, which I guess is more or less adequate and like appropriate time frame. Okay, what we'll do next here, I'll just stop explaining the Bollinger Bands strategy. And as you can see here is a note. So this strategy uses Bollinger Bands to identify potential overbought and oversold conditions. And this should generate our buy and sell signals. Okay, basically what we have, Bollinger Bands is kind of, it has like three bands, right? So it has upper band, lower band, and mid band. Basically, the strategy is very simple. In simple words and terms, we sell when Bollinger like bands reach upper band. So it is like overbought, right? Overbought condition. And here, this I'm not using any adjustments. So window is 20 days. Standard deviation or window deviation is 2. This is like kind of more mathematical part of it. So I'll not go dive into, but if you'd like, I can explain later on. And let me drop me in the comment. Okay, so Bollinger Bands lower, it's actually also has a window of 20 days. Window deviation is 2, and we buy when closing price reaches this band because this is our oversold, right, condition. And the Bollinger Band mid shows whether prices are on flat condition or there is no actually oversold or overbought kind of condition, right? And here we just consider if it goes down, usually it means that there is like continuing short or like bearish mood, and if it's go up of mid like band, it means that there is a bullish trend and we should continue buying. Basically, this is like more kind of second best, let's say, and this first two is most important one. Okay, let's go further. And here it's more kind of signal again, as you can see, right? As I explained already just here. So what we'll do, we buy, like for example, when the closing prices is like closer or like less than lower band, we buy it, meaning that one positive one, and we sell vice versa, it's negative one. Okay, the rest is more technicalities. We need to fill not available data with 0 to have more kind of data availability. It's just standard one. Here we define some like functions, let's say, like kind of what we're going to see in terms of returns and equity curve, right? So I'll not stop here much. And here we visualize, or actually we derive the metrics. Again, you can see already some results here, but it's just for different asset. I'm running just not all, and here we plot equity curve, and we can stop and also look how it behaved, the strategy, let's say for our SPY, like S&P 500 index, and actually for Apple stock. But this is it, yeah, just to remind, because I guess without explanation of the code, it will be hard to see for you as a viewer or a trader what is the logic of the backtesting. So now once I explained, let's just run right for Apple stock, and then we will do for S&P 500. So I already turn on my environment here, and I just click run all, and we need to wait a bit to see the results. So I can already scroll down to see immediately our last actually two code blocks, and then we can discuss. Okay, already run all the cells. What we have here, for example, is this kind of results. I'm sorry, a bit slow, yeah, slow probably like representation. So but now it's fine. Yeah, so actually here we need like these two code blocks. So basically, as you can see, if we use a strategy for Apple stock, like let's say in the stock market, I cannot say that Apple can be represented by all the stock market, but let's say like precisely for Apple stock, Sharpe ratio you can see is negative. So immediately the strategy is not worthwhile considering to risk reward. So we are like in negative 0.27, right? So it is not even the positive, it's not even the zero, but it's negative zero. So this is a red flag. Maximum drawdown, huge, right? Like let's say if we use 1 million USD one point of time to enter, like for example, one lot or not one lot, let's say 100 lot of stocks, we can lose 77% at one period of time. This is huge. Compounded annual growth rate, we're like over time compounded, right? Growth rate annual is negative 11%. Not worth considering at all because we are losing if we use this strategy for this kind of stock. And win rate actually is below 0.5, is 0.48, which is not interesting, right? Profit factor, of course, now will be less than 1 because we have more gross losses than gross profits. So it's 0.95, 0.95. This is actually not worth considering at all, let's say. But of course, this is just a standard default metrics for Bollinger Bands. We can improve some metrics. We can add stop losses. We can increase, like, let's say, our other metrics. For example, can put take profit position trailing stop loss, like, let's say, other like techniques and mechanics to improve the strategy. But let's consider it as simple as possible. So we're comparing as is. So as you can see, and we can go and dive into the visual part, you can see that if we backtest the strategy from 2016, right, you can see on x-axis and on y-axis our growth and equity curve, let's say for Apple, is going down, and there is no much volatility at all after 2020 in mid of 2020 after pandemic. So this strategy goes sharply from 1, let's say, and goes up to 0.3 and stays between 0.2 and 0.4. There is a band. So as you can see, this strategy seems not works well for stock market, but of course we should and we need to just to see how the strategy behave for other stocks. So if you are interested, please let me know which kind of stock or stocks should I backtest using the similar strategy for Bollinger Bands. Drop a comment and I'll do, and then we can compare it with Apple stock. Okay, this is it for Apple. I guess you found it interesting and valuable. So let's go back now and back test for S&P 500 now, and we will see how whether this strategy is better or not, right? For index. Okay, let's run all once more. Please wait a bit because there is some time needed to run all the cells. Okay, now it's finished, and we go directly to the last two cells. Okay, now it seems works. So what we have here, okay, Sharpe ratio, much better. So it's now positive 0.45, meaning that now the strategy brings us more positives than negatives, and we have like more or less good risk to reward, but it's not perfect because it is a bit far away from 1. So Sharpe Ratio is, let's say, more or less acceptable. Maximum drawdown is now much, much better. At one point of time, we are losing just around 30% if I round to the nearest tens or hundreds. Compounded annual growth rate is, sorry, 6.7%, which is fine, let's say, but I expected like more than 10. So more or less it's positive and brings us more than 5%. Win rate is below 0.5, it's 0.49. Profit factor is more than 1, around 1, which is more or less acceptable, meaning that our gross profits and gross losses are on the same page. Okay, let's just go dive into our visual part. So as you can see, similar to the previous part, we have equity curve and the growth rate and the years. So if we use a strategy from 2016, as you can see now, from we are gaining, right, from our growth rate, it goes up to 2, and we have gradual increase, although we have some like troughs here, higher volatility during like between 2020 and like let's say 2023. I guess we lost most of our equity here in 2018, the lowest, like our maximum drawdown, or even like at the mid of 2016. So more or less these 2 periods. But overall, the strategy behaves well for index, right, in terms of S&P 500. And if you are interested, let's compare in the next video how like we can create kind of a battle between indices, and we can backtest it for both S&P 500, like Nasdaq, New York, like news, right, and sorry, on Dow and Dow 30, like this kind of like indices, and we can just compare how indices goes to each other. But this time I just compared, like, again, or let's say stock market relative to index of the stocks, which is more or less comparable. But of course, there are a lot of things. There is, like you can say that there is a high diversification. That's why it's better shows our performance. But anyway, the idea for backtesting is not kind of considering its technicalities, its nuts and bolts, but just directly see whether this strategy works well, considering, for example, any asset, right? Like let's say stock, like index, or like forex, doesn't matter. So if we go to methodological point of view, of course, it depends on many things. Like, of course, like one stock cannot be like represented the whole stock market, of course, and it cannot probably beat, of course, in terms of like, let's say, growth, broad or like narrow index. But anyways, the idea is just to backtest. Okay, so please don't criticize me like much on that. I hope you find this analysis for S&P 500 useful. So this is it. I think this time it is enough. And what we'll do next, we should consider next backtesting video. Maybe we should consider another indicator. Please let me know which indicator you'd like to see next time. Maybe we should go to more kind of momentum indicators or oscillators, such as relative strength index, or maybe commodity channel index, or maybe like even stochastic oscillator. Let me know. And also let me know, please, on assets you'd like to see next time. Maybe we should put more attention on commodities, forex, crypto, indices like stock market. It's up to you. I'll be glad to consider all your opinions and views, and of course I'll adjust my backtesting recording videos and I'll of course let you know. So please put thumbs up if you like this video, and please put also thumbs down if you don't like. I wish you all profitable trades and good investment decision using Algo Driven Lab. Wish you all the best and see you next time. Bye.